Hi, everyone. Welcome to the second episode of Crisis of Confidence. Um, Today, we're going to talk about something that I have a feeling people might start to feel has been talked about ad infinitum, although we haven't solved the issue. I think there are a lot of opinions, a lot of really good ideas out there on the topic of fraud. I'm going to approach it from a slightly different angle, not entirely different, but slightly different. So hopefully it'll generate some ideas. It'll allow us to um, sort of take the conversation forward. As I said, everything I'm doing in this series is to not only present the issues, but also try and come up with ways of attacking the issues. So, what are we going to talk about today? Well, the first thing we're going to talk about is a segmentation of things that impact data quality. And we'll come back to some of those things in future episodes. Fraud is only one of them, but I think understanding them in the context of everything we've got is important. The second is I find that people do not have the same definitions of what fraud actually is. So I'm going to put out there my definition of fraud. Feel free to disagree, come up with your own definition, but within that definition, you'll need to defend or give ideas on how we're going to attack the problem. Then I'm actually really excited about this. We've got two guests on today's series. We've got Bob Fawson, and we've got Vignesh Krishnan, two people who have been trying to combat data fraud for much of their careers and have had real great success. So we're going to talk to them about a variety of different issues within the space. Then finally, we're going to talk about the impact of fraud on data quality. I think that might sound a bit obvious, at least at first glance. I think there are some elements of its impact that are not as obvious. So we'll bring those into the conversation. And then finally, I'll ask the big question, can we solve this problem? I think you'll be a bit surprised by my answer to that. So I like to put this up when we're talking about the issues in data quality, the issues surrounding the crisis of confidence, that in the end, it's all about trust. And what I mean by that is we wouldn't be having this crisis if we believed in the product we were putting out, if people believed in the data, believed they could make decisions. So in the end, it's all about trust, and it's how do we actually bring trust back into the system. So now we said it's all about trust. You need to ask the question, what determines whether survey data can be trusted? And there's a rather simple answer. It's looking at the responses that we're getting from it and what percentage of responses are valid responses and what percentage of responses are invalid responses. And at the end, can we actually generate genuine insights? Can we answer the questions we're supposed to be answering in the data? And the idea of data quality falls into the area of we need to minimize the amount of invalid responses to surveys that we're actually doing. So I came up with this a while back. This is my segmentation about what things affect data quality in surveys. The topic for today is the first one. It's outright fraud. We'll talk about the other two upcoming. And outright fraud is very important. As I said in my first episode, some people think that's where it ends. I am not one of those people. I think if the data is to be trusted, we need to do as much as we can to eliminate the fraud, but we also need to eliminate the suboptimal behavior we sometimes see in respondents. Sometimes that's generated by the respondent themselves. Sometimes it's generated by us, those who write the surveys, provide the content, who are actually conducting the analysis, things of that nature. And then finally, this is really on the supply side, those um, who are creating surveys and the content. So it's not just supply side, it's also the folks who are creating the content. What we see is a lot of poor survey practices out there and a lot of poor application of methodologies. When you do that, the data suffers, and the data is not able to bring insights um, into the client who's actually depending on us to do that. So you can finagle that there are other things out there. I actually claim you can put everything under these three buckets. But again, if you stop with outright fraud, I think you've solved a good part of the problem. You haven't solved the entire problem, and I think that's critically important to understand. Okay, so let's start off with what is fraud. I have actually a really simple definition of fraud. I think that we can talk about the applications and how, which I will do in a second, but fraud is a purposeful attempt to deceive an organization in the industry, either at the respondent or at the corporate level, in order to obtain some gain. I want to be clear. We'll talk about incentives, particularly when we get to our guests. The gain can be many things. In many cases, in the way most people think about it, the incentives that people receive for surveys um, can be the gain. There can be other things, particularly when the fraud rises up to corporate fraud, which we didn't have much of, but we've had a few big cases as of late. So you've got to understand what incentives people have, what gain they're actually getting, whether it's just purely monetary in terms of the incentives that are being offered for the surveys, or is it something else? And the other element of fraud is at the end of the day, the data provided cannot be trusted. Now, I say this with a new element of fraud being people using AI or LLMs to generate responses, particularly to open ends or qualitative, where it's not so clear that the data can't be trusted. So is that fraud? It's going to be a difficult conversation. The other part that we'll get to in the end is synthetic data fraud. I'm going to jump right to my answer. I think it can be. I don't think it has to be. I think synthetic data, we've been using what we call imputation in the industry for a long time. And as long as it's identified as being used, as it's used in the correct manner, and it's not the sole source of information, I think synthetic data is actually a really powerful tool that people can use. I think if you're just making up all the data, even if you have a reason to believe that some background information could be good enough, then I think you border on fraud, although it's not necessarily an attempt to deceive the organization unless it's not disclosed to folks. So I just want to give some examples of fraud. And the most important aspect of this is ever evolving. We can't solve for fraud once and be done with it. And the reason is there are incentives for folks to continue to do this. One of the more interesting ones, we do concentrate a bit on the monetary incentives for respondents, and that is a big one. But there was a study of fraud at one point in the industry, and there was a segment of folks who were perpetuating fraud, not because they wanted to collect the incentives, and I will say the incentive companies are doing some good work to try and eliminate the ability of folks to obtain incentives for the surveys, at least combine the their accounts or do anything of that nature. So it makes it harder. But the thing that really got me is that sometimes we're a stepping stone. Our industry is a stepping stone, and these are people who are looking for a much bigger score. And so their incentive, their gain, is experience. How do they actually get around systems? How do they fool all the fraud detection software without going into the bank for the first time. So there's a segment that is actually gaining experience for this. I found that really interesting because I had always had the blinders on that it was solely folks who are looking for monetary incentives within our field. And let's be honest, the monetary incentives aren't great. So unless you're living in a country where they do rise to the level of being fantastic, you might be spending more money to actually generate the incentives outside of qualitative. Qualitative and some of the specialty areas can have much bigger incentives. So let's talk about some examples of frauds. Ghost completes. I want to actually put this in there because this is one area, and one of our guests, Bob Fawson, and some other folks that I'm working with on the Global Data Quality Initiative, they were able to actually put out a memo which told people how you can actually solve this issue. And this is one of those issues we can solve. So what's a ghost complete? Well, people got tired of actually mimicking a real survey, and they noticed that the way that a company will interact with the incentive company comes through the end links. And if you just jump to the end link, you can actually count as a complete. You can gain the incentive, and you don't have to actually take the survey. So what happens on the supplier side? Well, on the supplier side, or whoever's conducting the survey, your counter is incremented, so you think a survey's been done. There's no data in your system, but unless you discovered it, you're on the hook for the incentive. Again, this is one of those areas where we know how to fight this in its current element. I'll get into reasons in the end as to why we haven't completely solved this issue, and part of it is what I think is kind of the cause of a lot of the reasons we haven't solved these issues. The next area that we see are AI generated responses for the purposes of deception. And I'm specific here because I don't want to lump synthetic data or other elements in here, particularly on the corporate side. There are some legitimate reasons to use AI generated responses as long as it's disclosed and that it's thoughtful and there's some data behind what you're actually doing. The next one is the one that a lot of people know, which are bots and algorithmic responses. You can actually go into data sets, and the interesting thing is AI can generate fraud, but can actually help us detect it as well. The NPD, a really wonderful gentleman, Mike Egner, developed a tool that could actually identify responses that were connected, and they were connected in a way that wouldn't have happened by chance. But these were because an algorithm was basically populating the survey, and these are getting better and better and better over time. So there's an element of randomness. You used to be able to just go through and group things by what were the same values. That's no longer the case. People are much more sophisticated at how they're actually generating these responses. And then they employ them through bots. The other sort of ways that people engage in fraud is through masking their identity, group GOIP mismatches, getting into surveys that they shouldn't be taking, pretending they're somebody else, things of that nature. Duplicate responses, and I think that's really kind of linked to the last one, which is intentionally taking the same survey on different accounts. And then finally, purposely giving inaccurate answers to screening questions in an attempt to qualify or not qualify. So it's interesting. A lot of this focus is on online behavior, online survey taking behavior. But for phone behavior or in-person behavior, some people are really smart at giving bad responses if they've interacted with the industry enough, so they don't qualify and they don't actually have to take the time. That too is an element of fraud because we're counting the non-qualified in our estimates at times as well. So it's better in those cases that we know they just don't want to take the survey, but we know the answers to their initial questions. So those are not the only examples of fraud. Again, it's ever evolving. Uh, but I just want to give a flavor of what we're talking about when we're talking about fraud. Again, the key elements are you're purposely trying to deceive the organization who's undertaking the survey, and at the end of the day, the data can't be trusted. Okay, so now I want to just introduce our two guests. I think many of you who've been around the industry know them quite well. I'll tell you how this is happening since we didn't do this in the first one. There's one really controversial episode coming up that I'm not going to have guests on, so nobody has to lay claim to anything that's said in there except for me. Um, but our two guests were asked, they were given an opportunity either to produce a video and send it in, or I could do a quick little interview with them. And given we have two guests, of course, each chose a different option. So our first guest is somebody who actually I'm privileged to call both of these friends Bob Fawson. His current role is co-founder of the Data Quality Co-op. One of the things you'll hear me talk about is the need for measurement, understanding what's going on, getting ahead of things. And Bob has seen this as well. And the Data Quality Co-op is really attempting to provide some meaningful information to the industry that they can act on and get ahead of the issues that we're actually seeing in the marketplace. Bob has been at many of the major companies. He was at Dynata. He was at Survey Sampling. He was at a small startup in Utah. He was at Numerator, all prior to taking on this role. So he's seen everything from all angles within the industry. Our second guest is Vignesh Krishnan. He currently is the Chief Technology Officer, not office, doesn't the whole office, but officer of Rep Data. And formerly, he's the CEO of Research Defender, one of the leading elements trying to identify fraud at the respondent level and provide some solutions for folks who are trying to do these things. By the way, there are lots of folks we could have on this. On LinkedIn, I've asked folks, for look at the various topics coming up. I don't endorse full, I'm not, this is not a means of me saying I'm endorsing everything everybody's doing who are members of the co-op. But I think these folks, at the very least, have a broad experience, have some interesting things to say, and have been trying to combat fraud in the industry. I do happen to agree with a lot they say, but don't take their appearance to mean that others, the others can't contribute as well. So I'm going to start with the two videos. They'll play in sequence. I'm not going to interrupt in between, and then I'll come back after we talk through that.
Hi, I'm Bob Fawson, co-founder and CEO at Data Quality Co-op, and I'm really excited to be a part of John's series today and talk about data quality. To me, data quality really is just data accuracy. Our job is to give our clients clarity about things they don't fully understand. And you get accurate data from real, engaged, and honest people. So we, as an industry, have normally looked at that along two dimensions, whether a participant's real, engaged, and honest. First, we look at how they access our survey and identify common fraud techniques on their browser, on their device. Second, we look at what they say, or whether their answers make sense in the context of the questions we ask. This has been a great model, but it's really under pressure. Increasing sophistication and fraud, and the fact that AI has made it dramatically easier to falsify human-looking data has created more of an incentive for bad actors to try and defraud the insights ecosystem. In other words, they have more sophisticated techniques that make it easier for them to attempt fraud at scale. And so the core of industry dialogue about eroding confidence in data quality is the fact that the quality indicators we've relied on for many years, while still necessary, are no longer fully sufficient. And I think there's also one other thing that's really, really important. These two dimensions I talked about, they tend to be applied as what I would call local solutions. That means each individual buyer and seller of insights is doing this evaluation within their own walls. Our industry is very light on global data quality metrics and transparency, which means we risk solving problems locally, but making them worse globally. Like when you attempt a survey and pass through 3 routers and spend 10 minutes going through multiple quality assurance modules because every company is doing the right thing locally, but creating an experience that drives real and engaged respondents away globally. So I want to just spend a minute and talk about a parallel example in consumer lending. As recently as very few years ago, banks were independently approving customers for loans who looked completely legitimate, identity checked out, made payments early. But those individuals were going to 5, 10 other banks and opening accounts. Each bank thought it had a small risk, but the system-wide risk was much, much higher. And actually, when the defaults started happening, they didn't even look like fraud to many of the banks. They looked like unexpected credit losses. This type of synthetic identity fraud really blossomed. Capital One leadership reported a 400% increase in their auto loan division over the course of just a couple years, and illustrates how risk grows when simple fraud or quality signals are stuck in silos. I think survey fraud works the same way. So at Data Quality Co-op, we maintain a quality history on respondents based on data our clients give us and other data we collect. And what we see that's very interesting are there are more nuanced personas of research participants that emerge over and over again. And let's take one as an example. We often look at high-frequency survey takers in the industry as bad, but we see clearly that there are honest high-frequency survey takers and there are dishonest ones. And the dishonest ones tend to have extreme response patterns, and their data is often even worse than that generated by bots. So trying to just qualify into the next survey. So in one recent study, 40% of these points-chasing survey takers reported extremely high purchase intent for clearly bad product concepts like nacho cheese flavored gum or scented motor oil. Imagine launching a product extension based on that type of data. And really we need global data quality metrics that take into account all the things we know about these consumers if we're truly going to trust them. So while the conversation about data quality in the industry is often pessimistic, I think the industry, through the efforts of many dedicated and very smart people, is solving kind of the core measurement challenge. Our fraud detection tools as an industry are getting much better. But we need to get together if we want to be the safe harbor for trusted first-party data, for trusted primary data in the future, to solve our global challenge, like has happened in many other industries that have had fraud issues. And that will be the foundation for the future of high-quality primary insights. Thanks. Reach out if you have any questions or if you want to talk.
I appreciate you joining us today, Vignesh. You've been around the you've been dealing with fraud for years and years at this point. Don't want to make you sound old, but
Yes.
you have a lot of experience in this area.
Yep.
What things do you see changing in the field? What things do you see staying the same? And how do we tackle the problem, in your opinion?
Yeah. So, John, that's actually a very critical and important question because you have to segment what does change and what doesn't change.
Okay.
Right? Because I think if you segment that, you can attack those pieces with different strategies. So going back to your question, what doesn't change? Okay. Fraudsters want money. That doesn't change. Fraudsters are attracted to market research. That doesn't change. Um, Fraudsters, typically because of the economics, do tend to be living internationally, right? Like
Yep.
countries outside the US where the dollar goes a longer way or the euro or the pound goes a longer way. And I think it's important to know that as long as those things don't change, there are some basic machine learning checks, technological checks that you can attack those, right? Because at the end of the day, the money transfer, doesn't change. And you can also think about like where to make those checks, right? Where is it most painful for them to cut them off, right? Is it through the process of the survey taking or the
Right.
participate in research, or is it at the point of payment, right? So I think it is good to have those things be static because then you're going to attack it where it hurts the fraudsters the most. As far as where it changes, I would say technology is the key word, right? Like 2.5 years ago, or even 3 years ago, there was no such thing as a ChatGPT or an LLM. And then today, I hear that word and frankly use those technologies as much as anyone else. And I think it's important, again, in a similar vein, to ensure that you have strategies, whether it's process strategies, technological strategies, business strategies, to target LLM-based
Yep.
sort of cheating as well. But again, keeping in the context of the fact that LLMs or any technology or any new XYZ tech is being used by the same quote unquote old people who are generic fraudsters
Yep.
who want money to take for taking the surveys and they want to get the money quick, right? So I would say segmenting that is important. What changes, what doesn't change. I think it's important to target different strategies for each of
Yeah.
those points.
Thanks for that. That brought up two things in my mind, which is, incentives from an economic standpoint are always important, and the way we deal with those is important. We've done some really good work. I think, you have done some good work, some others have done some good work, yet there still exists a lot of fraud in the ecosystem. I think people know that.
Yep.
How do we get our hands around that and start diminishing that? I mean, are there any sort of, I don't want to call it a magic bullet, so I'm going to
Yep.
call it a magic bullet. How do we get ahead of that? I think right now we're doing a good job, but we'd like, it to be less, if you would. Is
Yeah,
it
so
adoption? Is it, is everyone adopting it in the right way? Techniques.
yeah.
How do we get around that?
So I would say, like you said, it's not a magic bullet question. So let me go ahead and put that out there. Um, a major uh, fundamental existential question, I would say, for research is how fragmented do we want to be? Or
Yeah.
maybe even a better question is how fragmented are we, right? Because sometimes you want to be a certain way, but you just are a certain way.
Right.
Um, and I think that's important to note. And the reason I say that is if you go all the way downstream, like all the way downstream to a decision maker who's sitting in a public company boardroom,
Right.
and then on the other side of the equation, you have a supply manager who's technical trying to route respondents to the right survey, right?
Yep.
Right now, I would say there's a very big gap between those two people in what they're thinking about every day, right? Because the fraud and all of these things that we just talked about are very much upstream, I would say. And then the downstream people are probably not thinking about it that much because they assumed it's been cleaned along the way, which it should be. And so I would say like that tightness of communication across those lines and maybe a shrinking, if you will, maybe not technically or practically, but at least from a
Right.
mentality standpoint, I think is important, right? Because if those two people can get to closer, I don't think anyone is shocked to know that there is internet fraud, right? I don't
Sure.
think there's anyone shocked to know that, hey, there's an incentive, there are people who try to game it, right? And but today, I think people are really, really sitting on the opposite sides of the spectrum, and I don't even know if they're talking to each other. A very simple example, if I may share, is I've gone to both APOR, I've gone to SampleCon,
Yep.
and I don't think I saw even maybe I saw one or two people overlapping between those two conferences, right? And that's was interesting, right? And of course, we're all participants in this issue, so I'm not sort of forgiving myself either. So I would say tightening that chain, at least in terms of communication, is important, right? Just from a purely ideological perspective. Of course, I do agree with you that adding more technologies helps, right? Adding the right types of technologies help. It's not just us. We have, like you said, we have a lot of industry colleagues, competitors, if you want to call them that, downstream technologies, upstream technologies. And I think it is important to have those things in place and then iterate and work on it together.
Yeah.
And the last thing I would say, again, I want to avoid technological answers because obviously we have those things in place and we want people to use those, and those are almost obvious. But another piece is taking ownership of the data quality, right? Because I am not sure how many people or companies across the ecosystem have a data quality manager, right? Or someone who's the head of data quality, which I would
Yeah.
argue if you're in anywhere in that ecosystem, right, whether you're an upstream, publisher traffic provider, or you're a downstream, like someone reading a report, everybody there should have someone who's in charge of that data quality. And not having that, I would say, is a weakness that we see, and I know plenty of companies do, and that's great, but it needs to be a bigger part of every org, I would say.
You are just made the blurb for week 4 when I talk about organizational structure.
Okay, great.
So perfect timing.
Okay.
Anyways, I really do appreciate your time. I know you're busy and you've got a lot of stuff, but great thoughts and I think good fodder for discussion. Thank you so much.
Oh, thank you, John. Yeah, for sure. Okay.
Well, that was great. I think we learned quite a few things from the discussion that we had. From Bob, I'm going to oversimplify things. I hope you didn't just jump right here and you actually did listen to everything he had to say. But Bob really comes across with two main elements. One, I really do like his definition of what we're looking for. We're looking for real, engaged, and honest respondents, and I think that leads into data that is appropriate. These are things that I emphasize, so this is me listening to Bob and taking away from it something that I'm biased about. I do think he emphasizes the need for measurement, one of the roles that he's actually playing these days. And secondly, I think what's more important is in the guise of measurement, it's about having an industry-wide view of what's happening. I think his point about local versus global is well made, which is things can, you might interact with a respondent or a company once, and it might be seen as a unique experience, but that individual or company may be interacting multiple times across the industry. And if you don't have the wider view, you're going to miss things that are actually happening. So that was fantastic. The second, Vignesh, I think had, two great points, really three great points that we really need to think about as we're looking for solutions. One is understanding incentives. Why are people doing what they do? And again, it's to get some form of gain. As I've talked about, I think the primary amount of gain that you're getting, your people are looking for is financial. Frank Kelly, who's going to be a guest on one of the future segments, and I, a few years back, did what I thought was a pretty good piece of research. And what we wanted to look at was we have been saying all these things about incentives, sort of also things about how surveys should be done, et cetera, et cetera. Frank, if you know him, he works for one of the major incentive companies out there. And the research was illuminating. So I'm going to start off with the first piece of information about it. We actually only had to clean 10 folks from our sample. Now, it was John Bremer and Frank Kelly doing the survey and Dinata who did it for us. They knew that. And they do have some curated sample. But at the end of the day, knowing what we were looking for actually helped us out quite a bit. And both Frank and I know how to clean sample. If there had been more bad sample in the data, we would have captured it. So it's possible. Now, you don't have to be me or Frank in order to get that. From a cost perspective, it probably costs a little bit more to get the higher level of sample, but it does exist out there. The second thing we found is that incentives matter. And I say this in the sense everyone qualified immediately for our survey. Um, they ended up being able to go all the way through. There wasn't routing involved. They weren't moved from survey to survey. And then the incentive was what it promised to be. And what I mean by that is these days, a lot of incentives are pegged to the first survey you're invited to. They don't transfer along uh, as you get moved from survey to survey. And part of that is infrastructure. We don't have in many cases, we don't have the capabilities to move people along, but it's also budgets. If from the panel perspective, in order to engineer a financial system that pays folks what they need, it would require a lot of cooperation across the company. And I think that's really important to think about. Going back to Bob's point about global versus local, it occurs in multiple different places. We found out a lot of stuff. And one of our key findings was that incentives still work the way they're intended to work. And this is for good, honest, real, engaged respondents. They want to take longer surveys. So sort of the adage you have to keep a survey to 5 minutes or less or whatever it's become isn't actually the case. What we found is the case is that respondents typically aren't going into a survey experience only taking a 5-minute survey or a 10-minute survey or a 15-minute survey. They're bounced around and their experience is quite different. The amount of time, if you start a stopwatch when they start a survey to when they end a survey, can be quite different than the reported survey length. And we don't take that into account when we think about things. But there's another side to the incentive world. So, oh, sorry, the really big finding was you did not, going from a 5 to a 10-minute survey, you didn't need to double your incentive to have people want to do it. They just wanted more money. So I think 60% for the additional 5 minutes from a 5 to a 10-minute survey would actually lead to an extraordinarily beneficial response. People would be very happy with that. So you didn't have to double. You didn't have to go from $1 to $2, or really 25 cents to 50 cents. They would be happy to do it, instead of the 25 cents, if they got 35 cents or 40 cents. They would gladly do the survey that's double in length. Again, incentives work. They work the way they're intended to. That hasn't changed over time. I think we've built it up that it has changed. So that was the first thing. The second thing, and we've experienced this a lot in our lives, everyone who's done surveys, the higher the incentive, the greater the possibility of people trying to conduct fraud is. And we're, using really extreme examples, doing surveys, of IT decision makers where the incentive can become really huge. It's really difficult to, you've got to weed people out in some form or fashion, whether it's technology, whether it's, one of the things I found was actually some knowledge quizzes on the information that aren't readily accessible. But even AI makes that more difficult to do these days. But those surveys where you're getting $75 a pop, I remember one survey, and this was a decade ago, it was among IT decision makers in China. We estimated the fraud rate at around 75%. It was that high. So you got to be careful. The incentives are a double-edged sword. I think incentives work the way we want them to, but you also have to be careful. So there's a paradox there. But, Vignesh talked about incentives for those who are trying to defraud you. or commit fraud, we've got to understand those. And I think we can tailor technological solutions to that. I think they do a relatively good role. And as I said, AI techniques have done a really wonderful role of detecting that. Now, where in the ecosystem it detects it, whether it's live, I don't think we're really getting to AI solutions that are doing it live, although I can foresee us getting there quickly. I know Vignesh and others are working on those sorts of things. Um, the other really important thing I think Vignesh said was we need to connect different parts of the system. Somebody who's a user of the information versus somebody who's a producer of the information have different views on what's happening on. And we need to connect those in the thought process and the emphasis on data quality. And that's the final part. People need to take ownership of data quality from the front to the beginning. Now, it's strange. I would have actually gone further than Vignesh, and I think somebody who is a research scientist or something of that nature needs to be um, at the executive leadership level. I think that if you're in this world, having somebody in the room when discussions are being had about trade-offs, somebody's got to be there for the data. And that doesn't mean they need to always win the argument, but it needs to be considered. And I think everybody is well-meaning. I think when executive leadership teams are dominated by those in commercial or sales and tech, that sometimes gets lost because I think it's too easy to say, okay, well, the data quality is another element of it. And then finally, I think on this part, I do think that we risk a rush to the bottom in the sense of solutions that are available. I think we actually have some really good solutions available that can measure things. It's an ongoing dance. I think things are evolving all the time, but it's the implementation of those systems and it's making the hard choices. Um, I think that once folks are identified as potentially bad respondents, they need to be kicked out of whatever sample source they're coming from. Um, I know that doesn't happen. I know there are three strike rules and other things of that nature that people implement, and I know that there would be both a type 1 and type 2 error, depending on which decision you're going, in the sense that there are going to be mistakes made, and you may kick out somebody who's honestly just having a bad day and flag some things over time. But the problem is it's too easy. There are incentives on the corporate level to keep sample sources as big as possible, to in some sense forgive some fraud, uh, just in order to get jobs through the system, in order to have things that end up getting done. And I think a long, hard look needs to be made at making those difficult decisions. And maybe if we do that for a while, we can actually come to some sense of um, what um, the right um, uh, um, what the right thing to do is. It's got to be some combination of those two. But we've erred on one side well too easily. And again, I think having the person in charge of data quality on the executive leadership team or something of that nature, particularly in the industry, is critical as we go forward. So the next section is what's the impact of fraud? I think for some, this is obvious. The impact of fraud is financial to begin with. These are folks who are, taking incentives in many cases, um, although incentive companies do have plans that make it more difficult for them, but not impossible. And they do talk to each other. We all know there are Reddit channels on surveys and how to get in and how to claim the incentives and what are the best surveys, things of that nature. But we've got to make it more difficult for non-legitimate folks to be able to claim incentives, and whereas not burdening those who are legitimate, honest, real respondents. But financial is the first one, and that occurs in two ways. One of which is the direct financial incentives that we're paying out. But the second, and this combines with the other one, is the second issue is reputational. For bad data that doesn't comport to what we know, or if somebody makes a bad decision off the bad data, the future of the relationship with the end client is in doubt. The impact on the company, his reputation, and people deciding whether they're going to go with them or not shifts, and it becomes really problematic. And then final, the other one that I find damaging from fraud is when the data isn't trusted anymore, and fraud leads into this. It allows for other methods, for other ways of gathering information to come into play. And by this, AI is a great example, LLMs. And we query them and just get the response. Well, LLMs really kind of aren't informational sieves. They can produce a lot of good information, but they're not, they don't determine what's good information and bad information. But I am aware of one large, very well-regarded survey that was discussed at the industry level, with a lot of folks saying, we're doing cost cutting. It's an expensive syndicated survey to be a part of. And, we can just ask Chat GPT what the response is. Now, this survey still has decent data quality. So, even without the lower data quality, people are considering going away from it because of costs. This is another important implication of fraud, because you don't have trust in something, it's easy to replace it. And this is something that we're facing within the industry. So we come to the final question. Can we eliminate data fraud? The answer is no. We're doing a lot of great things. I think that we are able to detect a lot of it. We're not perfect, and you even heard Vignesh say there's not a magic bullet. I don't think there will be a magic bullet. The idea is to get ahead of it and to reduce it as much as possible, to make it difficult for those who are trying to perpetrate fraud on the industry, from collecting incentives, collecting their gains, things of that nature. I do think we need to keep moving forward, though. We're going to wither and die as an industry if we don't do this. So it's key. Technology plays a role. Measurement plays a role. Understanding the ecosystem, putting a premium on data quality plays a role. And I think you're going to hear this from me often in these series, competing on the quality cost frontier, which we don't really do at this point. Everything is considered in one, and it's judgmental. There's some differentiation at the highest end, your NORC data, those who can do high quality face-to-face, high quality telephone, but even those are withering away, and the cost isn't really seen as worth it, to be honest. So we're not really competing on a cost quality frontier very much anymore, if at all. And until we allow for that, we'll not be able to weather this particular storm. So I think it's important. This now puts it onto the clients, which is we have ways of doing high quality research. The sample is not as plentiful. The costs are higher. And when I say higher, I don't even mean all that much. And, I think making sure that people comply and are using the best techniques to identify fraud, it costs money. And if somebody out there isn't doing it and they are allowing for bad respondents in, but they're producing data, the incentive for a lot of procurement departments is to go with the lower cost vendor. We've got to stop that from going forward. And then finally, we need people to implement what's happening. You saw, I asked Vignesh this question. I do think there is, people who are in this business know they need to implement, but they don't always implement the best solutions that are available out there. I want to give one example, and this happened multiple times. So I feel okay giving this example because I won't identify, the company is actually multiple companies. I told you already that we have a solution for ghost completes, or at least a solution for now. I'm sure people will find a way around it. We had several larger companies saying we can't implement the solution, or we know about it, or something of that nature. And the reason they couldn't implement is their bigger clients, for whatever reason, didn't want it. And we kept going back with, but don't they understand? Ultimately, the cost will be less, and because you won't have to pay for the incentives that you can't figure out where things are going. Time in field will be less because you won't have a survey complete counter that is inaccurate. And the answer was, well, yeah, but they just don't want it, because it might constrain some of their sample choices. And that to me was bewildering. But that didn't happen once. It didn't happen twice. I don't remember if it happened 3 or 4 times, but it happened multiple times that effectively we got the same response. And this is something very simple. It's something that all companies have the capabilities of doing, particularly since there are actually 3 potential solutions that get you to the same place. So we've got to get beyond this, and we've got to be able to say, this is important, we've got to do it. And then the final thing is we've got to be able to pass information across the ecosystem. So back to Bob's point, we need to act globally. I know it's a competitive field and things are what they are, but we've got to pass information on what's happening at the very least. And we have the technology to do it. And in some cases it's being done, but in many cases it's not being done. And that precludes some of the stuff that we could actually do. I think it's becoming more and more paramount to actually do it. So data fraud's been something that's been talked about a lot. I do want to end with a section on the corporate fraud elements. I sit on the Insights Association Standards Committee, and one of the things that we actually do is we adjudicate cases against primarily member institutions where they've violated the code in some form or fashion. We don't actually get a lot of cases, so let me be brutally honest for this. And some of the cases, it varies as to what the member company is accused of doing. It almost all are solvable easily. It's either a misunderstanding or something of that nature. But when the opinion for good case came out, and again, this is all alleged. They haven't gone through, the judicial process at this point. But one of the things that came out along with that was, well, everybody knew. People had suspected, people had, done X, Y, and Z. I didn't know. Not a single person wrote to the Insights Association and said anything. We couldn't investigate anything we didn't know. This is one of those cases, particularly those who did know thinks everybody knows, and they don't. And there are places to take claims of fraud at the corporate level. I'm going to go back all the way into the early 2000s. I was living in London. We were doing a phone survey, and we were really pushing on our client because we were lagging what we needed to be at. And kind of after having a come to Jesus moment with them, not the next night, not that night, but the night after, suddenly they were complete. And there was no way they could have been complete. And so we started thinking about this. We looked at the data. We asked them for the recordings, which those of you who are primarily online space, there are recordings on telephone surveys. Amazingly enough, the system was corrupt and they couldn't give us the recordings. So ultimately, after some back and forth and several days, it was they admitted that they had made up, or some they didn't admit. Basically, they were like, "Oh, there were rogue interviewers who went and we were pressuring them, so they went ahead and made up interviews." That was all BS. I mean, that it was done at the corporate level. But we had our own client we were trying to serve, and we were late getting them data. We had to go out to another vendor. At the vendor that perpetuated this fraud did actually pay for it. And we are so concentrated on that, we never told anybody that this had happened. And it's problematic. Fraud at the corporate level damages the industry. It allows people to think all surveys are fraudulent, or at least question them. And so to me, this is really one of the most outrageous elements that we've seen. And again, you can point to the opinion for good and case, but it's been happening. As I said, this happened in the early 2000s, and it was telephone, it wasn't online, and things of that nature. So report things that you see, report things that you have at least some you got to have some evidence, but tell people, particularly people in the space who are on things like what I'm on. SMR has something very similar, but make sure that we always, when we give the member company time to explain, and in most cases there's a really good explanation, and it doesn't go any further than that. So I'm going to go to the whole New York transit system. If you see something, say something. It's critically important. Stuff like that damages the industry more than you can know, and particularly in this day and age where we're in a transitional period, the more damage that happens to the industry. I think both sorts of frauds, respondent level fraud and corporate fraud, are bad. I sort of have my I think both should be eliminated. Corporate fraud is the one that's more of the bane of my existence. So that's it for today. I hope you enjoyed. We're going to go to other data quality concerns, coming up. I think at the end of the day, we have, I wouldn't call them solutions. We have ways of pulling back fraud, particularly at the respondent level. It's not what we want. We're still losing some money from it. And particularly in the age of AI, we can identify at least the more traditional ones. It's going to get more and more difficult. So we need to keep going after it. My claim is that even if we eliminate this sort of fraud, which is really what, if we eliminate fraud and we get to the point that we can say we've done a really good job. Are we going to be over the crisis of confidence? No. I think a lot of things that we're doing still lead to that. And I'll talk about that in the next session. Anyways, everyone have a great one. If I don't talk to you, probably the next session will be after the New Year's. So have a happy New Year, and we'll talk to you in 2026. Anyways, take care. Bye-bye.